Where did Summer go? She's still here? It's on the door. Summer, Polymarket has clarity passing odds at 40%, so you have a good opportunity to turn $1 into $2 if you think it's at 90. Well, thanks so much, guys. We have another panel. We're going to pivot, shift gears a little bit from regulatory landscape to institutions and how they're gate crashing the crypto world. I'll invite my panelists up to join me, and we can dive right into it. Since I've been covering this space, the question of when the institutions are going to arrive, start building in this industry has been top of mind, and it seems like we finally reached that stage. So we'll kick things off by just doing quick introductions. Remember, there's a difference between introducing yourself and pontificating ad nauseum, so we'll keep them tight. I'm Frank Chaparro, head of special projects and content at market making firm GSR. And don't hold this against me, I also host a podcast, which most men of my demographic profile do. But we'll let the ladies speak for this session.
Hi, everyone. Kathleen Rinn, Global Head of Digital Assets at Invesco. Been with the firm about a year now. We created a dedicated digital assets team a year ago when I joined, really to take all of our efforts and make it much more scalable.
Hi, everyone. I'm Krista Lynch. I lead capital markets and trading at Grayscale, and I work primarily with our authorized participants, ETF market makers, and crypto liquidity providers.
Hi, everyone. I'm Katrina Paglia, the Chief Legal and Compliance Officer for Pantera Capital, a blockchain exclusively focused venture capital fund. And I know I'm not supposed to pontificate, but I love that this is like a female panel. I just have to throw that out there. This is amazing.
Yes,
that is pretty amazing.
Very amazing.
Yes.
And last time I saw Frank was at a female-focused summit as well, so very excited.
Jacqueline, do you want to just swap in for me right now?
No pressure.
Well, no, this is fantastic. Good representation. So let's set the stage, right? Because crypto has been stuck in the doldrums for the better part of the last 10 months since the infamous 1010 sent our markets and our capital markets into a tailspin. But juxtaposed with that, right, have been nonstop headlines, nonstop developments out of the storied institutions of Wall Street, from New York Stock Exchange to BlackRock. We almost get a new update every day, right, from BlackRock purchasing some Uniswap. These are headlines that, if you would have told me even 2 years ago were in the realm of possibility, I would have called you crazy, Kathleen, and I would have had no problem doing so. So how do you think through that juxtaposition? What is the state of crypto right now?
Yeah, what we were saying is that this crypto kind of winter since October really has kind of been institutional summer in a lot of ways. The institutional adoption that's been taking place, especially since the start of the year, has been absolutely incredible. We publish just a daily feed on all news internally, and my team was just so shocked yesterday alone how many institutional announcements there were globally as well. It's really incredible how much traction we're getting. I think that's really because, historically, especially within asset management, the crypto focus has really been around how can we get digital assets exposure into portfolio constructions, which is absolutely still critical. But I think the big unlock as well over the past year has been, this is a structural shift in how we operate as asset managers going forward. And with that, tokenization rails really unlock a lot more opportunities. And that's been a lot of the focus recently.
Krista, what's behind the shift, right? I mean, part of it might be regulatory. Even though we don't have clarity, it does seem like institutions are comfortable operating in this market.
Yeah, we spend a lot of time on education, and that takes a lot of time in and of itself. So some of these institutions, we've started the conversation with them years ago about how they can invest in Bitcoin, why they should invest in Bitcoin. And now, as overwhelmingly a lot of their clients are demanding access to Bitcoin, they're realizing that they really have to be able to provide that access to their clients. So I think seeing some of it manifest now is not necessarily out of the blue. It's conversations that have been going on for many months, in some cases years. And just a couple examples of some of the ways that we've been trying to help educate them. We actually go around the country and host a series called Crypto Connect, where we go to different cities of interest and host half-day seminars as a way for advisors and other institutional professionals to understand what's available to them, what's available to their clients. We've launched other educational resources on our website, like the Stack that our head of research posts on a nearly weekly basis. And those have been some really popular resources for those who are trying to get up to speed with crypto. Again, taking many months, in some cases years, and now starting to see that really come to fruition.
Katrina?
Yeah, I mean, from our perspective, we're seeing a lot of institutions willing to have the conversations about allocations to a crypto-only venture capital fund. Actually, literally just yesterday, we launched as the first digital asset fund on a large bank from a private wealth management perspective, and that's huge, right? Like, this is the first that this large bank is willing to offer to their private wealth clients. So that was a really big milestone for us. In addition, kind of looking at the portfolio, I think we're seeing IPOs of a lot of our portcos that are crypto focused, which is a really great sign that the capital markets more broadly are opening up to them. And then the other, I think, big unlock we saw probably a year and a half ago at this point was the approval of the ETFs. The Bitcoin ETF, which now everybody's very aware of, was a very big thing. We seeded one of them, and it was a big rush to the finish line with a lot of comments with the SEC to get everybody moving at the same time. And that was a really big unlock from a retail perspective of, hey, you can have access to Bitcoin, you can have all the transparency, you can have all the reporting of these 40 Act funds without having to go and actually open a wallet. And that, we think about this, there's a lot of people that still don't have wallets. Like, my mother will never have a Coinbase wallet, but she can buy into that ETF now and get access to that. So the ETFs, I think, were a big unlock, and we've continued to see the evolution of that over the last 18 or so months.
So that's interesting. So you would say the ETF was one of the bigger catalysts. And it's not just access, right? There's also tax advantages to investing in crypto via an ETF.
Yeah.
SEPs, IRAs, those types of vehicles, you can't buy direct spot crypto.
Right, and I mean, another kind of, to your point, IRA rings the bell of 401k, right? Like, Fidelity now offers a Bitcoin option in their 401k, and again, this gives consumers who maybe aren't as crypto comfortable access to just get a little bit of an allocation to our asset class.
I've noticed over the past, let's call it, 6 to 12 months, most firms on the street, through either their asset management arm or their research departments, have put out some, form of a allocation recommendation. Do you have a sense of what maybe the street consensus is for how much should you put, how much crypto should be in your portfolio, and what's the role in that portfolio construction?
I think it really ranges based on where the particular investor is in their journey.
I've seen up to 7%.
I think I love 7%. I think that
This
might
guy
be a
has
little
100%,
high for
I
some.
can tell.
But again, it really depends on where the investor is. We work with investors who are just learning what Bitcoin is, and then we work with investors who are ready to go into individual protocols much farther down the capital stack. I think one other point on the ETFs, and something that I think has been really interesting, is it's broadened the horizons not only for investors who didn't have wallets, were hesitant to open wallets, but we're also seeing a lot of investment in holders that have native token, and they're able to access things like we talked about, putting their token into an IRA, putting their token into an account with tax succession planning, and other U.S. broker-dealer features that they would expect on their accounts. And I think that has really driven a lot of investment from a different type of user into the ETFs as well for that kind of access theme.
Yeah, completely agree. I think that meeting with clients, especially in the U.S., such a wide range of understanding and where they want to access, and with the ETP wrapper really allows for you to be able to kind of take away all the on-chain friction, having to manage a wallet, and really have in a very accessible and familiar way to gain that access.
You also have both sides of finance, the crypto side and the traditional financial services side, what we call TradFi, kind of converging, right? Where crypto assets are being wrapped in ETFs, but at the same time, there's a lot of talk about how we can leverage the crypto and blockchain technology to wrap equities and ETFs via tokenized equities and vaults. Where is the momentum right now?
I think there's incredible momentum across the board. Just from our view, we are very big on partnerships as a firm, and so we believe in really taking the best from the digitally native community providers and partnering with them as we deliver products. So in the U.S., since we're here, we partner with Galaxy Digital on all of our crypto ETPs, and it's been an incredible partnership for 5 years, really to take that digitally native expertise with our traditional asset management background. The same with tokenized products, partnering with Superstate on several products as well there going forward. When it comes to what's to come, I think yesterday was a very exciting event that DTCC held. It was one of the largest tokenization production events that took place. We were excited that our Invesco QQ product was the first product that was part of the equity token transfer use case. But there were 7 different use cases, over 30 different companies part of it, and really very many asset classes. So really exciting the traction that's being made currently.
We're seeing a lot of interest in the U.S. Treasuries being tokenized. So I think Ondo might have been one of the first ones to do it. And if you think about what that means, it's 24/7. The settlement's relatively immediate. You have access to Treasuries. That's just the U.S. Treasuries, and I think that's going to expand, and other countries have kind of done the same thing. But the speed, the efficiency, the comfort you have that you're getting this thing immediately and you can do it whenever you want to, and kind of just extrapolating on that a little bit, if you think about the fact that crypto is 24/7, I think as investment advisors and fiduciaries, we need to be thinking about what our obligation is now that we're kind of trading outside of just the traditional NYSE and NASDAQ stock market. So the 24/7 access to this asset class, whether it's tokenized treasuries, digital assets, Bitcoin, I think is something that we all need to be thinking about in terms of how we should be managing our portfolio and our liquidity. Because if you're not around the computer 24/7, something changes, you're going to miss out. And that's a difficult thing to manage from a legal and compliance perspective.
And the points on convergence, I think we actually did a survey with the Harris Poll, which is a think tank, to understand where a lot of young investors have their first trading experience, and it's often with digital assets. So I think that really pushes traditional providers to offer features like 24/7 trading, the ability to settle instantaneously, the ability to get your cash out of your account immediately. And that's really going to require digital rails. So if you think back to like 2 to 3 years ago when people were talking about what is the value of tokenizing cash in a stablecoin, I think a lot of traditional providers were like, this is kind of boring, why do we need this? But now we see so many use cases for it. We see it implemented by big banks. We see it implemented in real value-add ways. And I think that the conversation for tokenization is going to progress very quickly for similar reasons, because it can offer those crypto-native features that young investors really demand and require.
The market's just so different as well. I feel like a huge catalyst for tokenization and the perpification, if you will, of the market has been tied to the fact that so many things happen off hours. The president might decide Saturday night at 2 a.m. that he wants to implement some sort of tariff on the Strait of Hormuz or not. And so you need to be active because the markets are changing at times when they normally wouldn't be. How does the market structure, though, work for that? If you sort of have different wrappers, different products, where's sort of liquidity going to be centralized, and how do you navigate, what could be a bifurcation of liquidity?
So here I think, to me, I look at things like perpetual futures, where we're seeing a lot of activity gravitate because they are available on a 24/7 basis. But until recently, were not available in the US. But we do see some of the US providers, I would say, entering the conversation, whether that's in support of hosting similar features, similar products, or if it's potentially to help create the legislation around how they can come to US markets. So I do think that there's going to be this theme of convergence again. You see demand for certain features and some venues that are able to offer it, and then you see other incumbents who enter the conversation, whether that's because they feel threatened by these new vehicles or because they think that they can build a better mousetrap. But what ends up happening is convergence, where I think that these will be hosted in all of the venues, whether that's crypto native or traditional, but it will take time to get there.
Any thoughts?
Yeah, no, I absolutely agree. I think that it's going to be an evolution over time. I think that we really need to create more use cases to want to create more tokenized products. I think when it comes to the adoption we've seen, or private market fit stablecoins have gotten, tokenized money market funds have clear use case. But when it comes to other areas, we need to create more utility, and with that comes the need to integrate more with more decentralized protocols and other opportunities. And that's where regulatory clarity is absolutely critical to have clear rules of the road on how we can interact.
What are the biggest impediments to those integrations from the perspective of a firm like Invesco?
I think that we can operate in a gray area. We believe in responsible innovation. I think that the hacks that have I think Jack was mentioning it in the past panel, the hacks that have happened this year in DeFi protocols is very concerning. Mm-hmm. I think historically, is very much kind of like when it comes to collaboration, the asset manager wasn't as involved. That would have to change going forward to have meaningful size and scalability. So thinking of what happened with the crypto winter in 2022, that was really the test for us to move from more private permissioned networks. We were constantly having conversations of private versus public. Now most large institutions operate on public blockchains, not a question. The crypto winter in right now is really, I think, that test for decentralized finance protocol. So how can we collaborate together with DeFi native players to find these use cases, to create institutional grade solutions, to manage sizable assets on these decentralized rails?
I think it's often surprising that crypto practitioners want more rules and regulations, of course, within reason, but they really do provide guardrails for us to know where we can invest in a way that will be permanent. And a new administration won't wipe away all the work and investment that we've done in a particular build. So I think things like the Clarity Act, we're very optimistic about them, about the permanence that they can bring, and about the certainty that they would allow us to build with confidence new applications that we know will be evergreen. I think in the absence of having those guardrails, it can be very difficult to hone in on specific things to focus on because there's so many different combinations and permutations on the chessboard, and it's constantly evolving.
Yeah, and kind of from the VC side of the house, when it comes to clarity and understanding the rules of the road, we saw a pretty big shift outside of the U.S. from a development perspective over the last, prior administration, right? Like our porcos were coming to us saying, how do I not get subject to the SEC? How do I stay out of certain states where their money transmitter licenses are a little bit more aggressive? How do I avoid being sent subpoenas that as a startup, as an early stage company, you don't have the resources to manage? So I think what we've seen since the new administration has come in and the new SEC and CFTC have come in, and the collaboration and the communication with the industry has been light years different from what we had seen previously. The building and the development and the innovation is coming back to the US. It's coming back here. It's combining with AI. It's combining with robotics. The capital is here. People want to develop in the US. They want their companies to be here. So we're seeing a big uptick in companies and our portfolio companies, and even the folks that we're looking to invest in now in the new fund, really wanting to be in this country. And I think that's where we want to be, right? We want to be competitive. We want to beat China. We want to beat Europe. And I think that's the US mentality and the administration and both sides of the aisle that we are seeing, as Summer was just talking about. They both really want this bill to pass, and I think it's just a huge unlock for bringing a bunch of capital and a bunch of innovation back here. And we are seeing it just from all the companies that we're talking to regularly.
There's been an increase in the portfolio in American founders.
The conversations are significantly more positive. I don't know the data, but it has pivoted more towards here. Or it's not even like American founders, it's founders who are willing to have a presence in the US now as well. Like they're willing to hire in the US.
Without fear of reprisal.
Yeah, exactly.
But not France. You guys know about France, right? Don't want to be a crypto founder there. There's a lot of wrench attacks, get your fingers chopped off. It's terrible. No, seriously. What were you going to say?
News to me, that sounds terrible.
No, it's really bad.
And I love Paris, so that's awful.
Yeah, because the IRS there, or their version of the IRS, has been infiltrated, and they give out, addresses to different crypto founders and crypto investors. Opposite environment here.
Yeah.
I will say the collaboration between France and Germany, though, on kind of propelling digital asset is very exciting right now. They're kind of coming together to make things more scalable.
Good to juxtapose that with something positive.
But definitely the kidnappings are a concern. And just to add to that point as well, I spent spending the day on the Hill yesterday. Really exciting to see the engagement from representatives. So I think really exciting from a U.S. perspective. What's to come? Yeah,
to echo Summer's points about how far we've come from the perspective of regulators being engaged with this industry. At this event, we have in the next session 4 Congress people joining us on stage. We have we have some comments from Senator Kirsten Gillibrand later today. This is just a completely different environment. And not only are they engaged with digital assets, but they understand digital assets and their importance in the American economy.
Yeah, I think the regulators are making a pointed effort to hire crypto native or crypto focused people in the various divisions. I mean, one of the issues from the RIA perspective is the custody rule. It's a constant struggle, qualified custodian, where do you actually put these assets to be secure? And the rule as drafted is maybe not the most fit for purpose rule. I've been on calls with the SEC where you have folks from like audit, exam, enforcement, policy, economics, and there's more of them than there are of us, and they're just like, okay, explain to me why you can't just put this thing at Coinbase. And we're like, well, Coinbase can't just turn it on, and like, there's engineering, and there's coding, and there's prioritization, and they really are asking us for information and trying to fill the void either through non-enforcement letters or rulemaking or what have you. So the engagement, the collaboration is so incredibly positive right now, and not to go too far in like the positive direction, but we feel really good about the engagement between all of them. And again, like the collaboration between the SEC and the CFTC is really special. And like you see them partnering, you see them doing joint sandboxes and joint issuances, and that's what you want. You don't want a turf war because that's not good for anybody. And the new folks kind of at the top of both of those agencies really are making us feel positive about it.
I would echo that. Being at Grayscale before the Bitcoin ETFs came to market, and we were, of course, the ones that brought the lawsuit to bring them to market, those engagements pre-ETF under the prior administration sometimes felt like talking to a wall. There weren't a lot of two-way dialogues. We would, of course, have our arguments and our cases, and we would be looking to engage, but it just wasn't really received in a conversational manner. But now, under this administration, I've been to the crypto task force twice. They're very engaged. Not only do they want to build the rules of the road, but they also want to thoroughly understand. And I think that's very refreshing to have regulators who want to work collaboratively. They want to ask questions. They want to really understand the subject matter of what they're helping to administrate. And the welcome reception that they give for people to come in, speak with them, meet with them, speak to them about various topics, illuminate things to them, I think is just a total 180.
Yeah, I mean, it's not just a difference in engaged and disengaged. It's between antagonistic and collaborative. I mean, the arguments against a Bitcoin ETF coming to market under the last regime were capricious. I mean,
arbitrary and capricious, we like to say.
It was insane to argue that the Bitcoin market wasn't of sufficient size to warrant funds on top of these assets just made zero sense. And I think, now and that's why, most of the activity had been onshore. If you think about exchange volumes, for instance, 80% of crypto trading volumes are still offshore. Do you see that shifting?
Yeah, I think things like the ETFs obviously open up U.S. investment. Perpetual futures are another interesting area to look at where they've traditionally not been offered in U.S. markets, but we're now starting to see some regulatory conversations around how exchanges here could potentially offer them. So I think that that's another area that you might start to see convergence. Again, you might start to see things shift from being uniquely overseas to potentially more in the U.S. And I think that that's really exciting, and I think that it's kind of what we need.
I absolutely agree. I think that also all the progress in the U.S. is also helping to propel other jurisdictions to also take meaningful strides. So I was in Europe last week, Asia the week before. Really exciting, all the traction that's being engaged globally around the digital asset ecosystem. Thinking of yesterday in Japan, launching crypto regulation. The FCA the week prior with a lot of the work they're doing to have the books and records of a tokenized product be the on-chain books and records. These are things that's needed to help propel us across the digital asset ecosystem globally.
Kathleen, you must be, platinum with United. You're traveling all over the place.
I don't use United, but Delta, yeah.
Delta, okay. I'm a
really excited in the traction.
United guy. With the sort of, all the developments that we're seeing with institutions adopting crypto, it doesn't seem, or at least it hasn't seemed like that has accrued to the tokens themselves. I'm curious about the conversations you might be having with institutional allocators. Are they scratching their head right now because they're seeing the headlines about what's happening with institutional adoption, and yet their coins are not doing well, to say the least?
I'm happy to start with that one. So I think a lot of our institutional conversations focus on Bitcoin. And of course, there are some who are ready to branch out beyond that. But Bitcoin, for many, we live in our echo chamber being crypto natives and crypto enthusiasts, but many are really still at the stage of what is Bitcoin. So I think that there's kind of two separate tracks to the conversation. One is initial education, which will probably focus on Bitcoin and the digital asset kind of thesis of blockchain technology. And then, of course, there are individual tokens. So we've been excited about the opportunity to launch individual tokens beyond Bitcoin and Ethereum through rules and regulations like the generic listing standards that came out last summer. That's a framework for how different tokens beyond Bitcoin and Ethereum can become ETF eligible. And we've been able to bring 9 different exposures to market in single token form as a result of that. Now, some of them are seeing appreciation, like Hyperliquid, for example. We've been talking about perpetual futures. Hyperliquid is really the biggest venue for trading those on a decentralized exchange. And we have seen correlation between the use case with the trading of perpetual futures on the DEX and the token itself. But I think many of the institutions that we're talking to, if they're still asking what is Bitcoin, they're not yet ready for Hyperliquid, but we will get there. And other tools that make it more accessible for them to invest broadly are index funds. I think that could be another potential area of focus in the coming months as we see more and more tokens available in this accessible format. Potentially those investors that are really at the beginning of their crypto journey might be overwhelmed, but an index product is a way for them to invest broadly in digital assets without picking tokens individually themselves.
I think in addition to all the access points that Krista made, which are fantastic, I think, and the generic listing standards now allowing us to create more complex products. Also, the product features we can enable as well. So thinking of, Solana, Ethereum, the ability to add staking as well is a great new feature to add more potential yield opportunity for products.
Mm.
Yeah, I think institutions benchmark against Bitcoin, right? So any asset that is not outperforming Bitcoin, any token that is not outperforming Bitcoin, they're not going to have much interest in. So it's hard. It's a bet, right? If you're going outside of Bitcoin, ETH, Solana, like the big names, you're kind of really making a educated bet on what that, not tail asset, because we're not going to go there, but like something in the middle bucket, right? And I think a lot of institutions aren't super comfortable with that. I think they're used to transparency, they're used to reporting, they're used to things that they are comfortable with. So that is why the ETFs and the products that are kind of put in this framework that they understand are where they're focused versus individual token purchases. Like, it's going to be very hard for them to, one, I think, get it through their investment committee approval to say, hey, we want to launch a liquid token fund and we're going to put a PM in there and they're going to pick all the assets. It's going to be Bitcoin, ETH, and then 15 other ones, and it's going to be run like a long short shop. Like, that's going to be a hard thing for them to wrap their heads around for now. I think once we get clarity and there is transparency and there is reporting on some of these things, and they know CFTC is regulating them, I think you'll see a lot more comfort in token-specific investments. But until then, for those reasons, I think institutions are hesitant to go beyond kind of like the top 5 or 6.
Mm. But that's part of the huge problem that we have in crypto, is that you don't have a very robust secondary market, long, short, hedge funds, or those types of players engaging with the assets. Barring clarity, is there anything that issuers, we'll call them, can do to sort of engage with that market, right? We've seen some, like Aave, for instance, do something similar to quarterly earnings calls on X. We've seen others represented in research reports from investment banks like Standard Chartered. Is there anything that the token community, if you could give them some advice to engage with the liquid side of the market?
I think everything you just said is right. I think the more you can look like a public company from a reporting perspective will help, right? So the early stage stuff that we're investing in, the sophistication isn't there, the track record isn't there, the financials are just not anything that's going to be super attractive to the institutions until they get further down in their series rounds and launch that token. So the Aaves of the world, I said Ondo before, but once you get to the more sophisticated maturity level, then you can actually produce the materials that the institutions will like, and then using the channels that they're familiar with, the quarterly reporting, whether it's on X or you do a LinkedIn thing, or offering your management company for meetings. We do have management meetings. We actually do have a liquid token fund, and our portfolio manager will have what the equivalent of a management meeting is with the founder and the CFO of these companies, and we'll do a fundamental analysis from top down, similar to what you do with Apple. But you have to have the sophistication and the maturity of the product before I think you're going to be able to have those conversations. Earlier than that, you're an early stage VC, and that's a very different conversation.
Yeah, that makes a lot of sense. I feel like with retail sort of being, burnt or, exited from the market, crypto projects have to appeal to institutions in some shape or form.
They have to be something they understand.
Yeah.
So there's a really cool investment or company that we were looking at, talking about tokenization use cases. Imagine if you didn't have to KYC every time you go into a new fund. So you can put a token on the blockchain, you verify it once, you can invest in my fund, you can invest in Grayscale, you can invest in whomever, and you don't have to provide all of this information again. It's like pre-check, TSA pre-check for investments. Same thing for banks. Same thing for background checks. You get background checked every time you get a new job. The same information that existed when you got the prior job should not have changed in theory, right? So mortgages, you have to do the check every time, the title property search every time you buy a house. 55 people have done that before you. The information has not changed. If you can take those types of things, put them on the blockchain, verify them, and really create the efficiency and the comfort that you don't have to repeat this stuff that really should be standard and static, that's when I think you kind of see some more exciting stuff happening from a use case perspective.
And that's why I think industry collaboration is absolutely critical, because in order to achieve that, we need to have agreed upon more standards and principles for how we're all agreeing to have KYC and onboarding, so that we don't have to onboard, as mentioned, across every different institution. So I think there's a lot of great work that's happening to foster that collaboration. Just one thing to mention is the Global Digital Finance Organization published a great report last week on tokenized money market funds and how different collateral use cases are working with many different TradFi companies.
How do you think the industry is getting in its own way?
I think sometimes the need to dumb it down is not the right way to say it, but to make things digestible, we often are having conversations with very sophisticated institutions, and we assume that they're light years ahead of where they actually are in their digital asset journey. And I think the points about approaching it like you're pitching a stock. So they want to understand what is the value proposition. They're probably coming from a traditional finance background where they want to be walked through logical, sequential understanding of what the value proposition is. And so I think taking an approach that, nothing is too basic, I think is very helpful to not intimidate people that are potentially going to deploy resources into the protocol, not alienate them, and help them really come along for the journey in a way that feels very approachable.
Institutions are like 5-year-olds. You got to kind of walk them through it slowly and carefully.
Yeah, I mean, they're curious. They're asking the questions.
So are 5-year-olds. Very curious.
Well, it depends. But they are. No, they are. They're curious. My 5-year-old's just a wrecking ball. She's just like, doesn't ask the question, just does it. But no, they're curious. But I completely agree with Krista. Like, the conversation is, hey, teach me about this, but you're probably 18 months from actually deciding to make the investment. So what you're doing at this stage is just trying to be one of the top 2 or 3 finalists that they're going to be continuing to have the conversation with. And that's the goal at this stage. And when they decide, hey, we're really ready to give dollars to this, they kind of like to spread it out, I think, right? Like, you're hoping to get a portion of what, and it's a lot of the international sovereign wealth that are a little bit further ahead than the US institutions, I think. But that's kind of where the cycle seems to be moving from my perspective.
You guys are on your 5th vintage?
Yeah, we're in the market with our 5th venture capital fund right now. We also have early stage token and liquid token.
How has the profile of LP changed in 13 years, I think? Pantera is one of the first venture funds in crypto. Yeah,
our first fund was actually just a passive Bitcoin hedge fund, which still exists today. The profile has changed materially. The first venture fund was Dan Moorhead and a few of his Fortress and folks from eventually Galaxy deciding that they wanted to invest in venture, that this Bitcoin thing was super interesting, and that was like the beginning of it, and like, hey, we made a couple of really good investments. And once you make some good investments, they kind of stick with you. Our investor profile has increased from an institutional perspective. Banks, international, sovereign wealths are more interested now than they were in the earlier vintages. But we are still largely high net worth and family offices because they can move quicker, they can make their own decisions, they don't have these massive investment committees. But I will say we're having more ODDs with consultants. Like I said, we just got approved on this private bank, private wealth platform, which is huge. And we're having kind of unique product offerings now and special opportunities, which a lot of the institutions are super interested in because the blockchain industry has matured. So there's not just, hey, I'm going to invest in Coinbase when it is raising capital. There's a secondaries market that has developed, which has become very interesting for us. So the FTX bankruptcy is a great example. FTX has a whole bunch of assets. It filed for bankruptcy. Those assets had to get sold. And a lot of folks started having conversations, and it's like, okay, I will buy your interest in X portfolio company. I will buy some of the tokens that are locked for X period of time at a discount, and as they unlock, I can sell them. So there's been an interesting secondaries market. We call it special opportunities at Pantera, where there's very unique, usually single asset purchases that are somewhat large that a lot of people with a lot of money are very interested in because it's not just this broad, hey, I'm going to invest in a 10-year venture fund. It's a very defined, it's a very finite, very specific, you know the one asset, you're not just putting money into a VC that's going to do what they want with it. So there's more increasing interest in the special opportunities as of late than we would have seen. And it's because they just exist now. They didn't exist before.
On the point about the profile of investor, through the ETFs, we've also seen that evolve a bit. So before the ETFs came to market, we saw kind of a barbell in who was investing in digital assets, at least from our perspective. There were retail investors who were doing things on their own, and then there were very sophisticated hedge funds who were also in the crypto space. But the middle ground was not really, I would say they were either underserved or they weren't getting involved for whatever reason. Now, the ETFs and the access that they've provided, making things much more approachable, much more similar to investing in a stock or other familiar equity exposures, has really opened up those doors. And then, of course, we now see the advisor community starting to get involved and really bring more of their clients into the fold as well. So I think that for us, how it's evolved is it's really bridged the gap between these two kind of extreme ends of the spectrum and made it a much more accessible asset class for all.
Yeah, well, you have part of that is channels opening up, right? When you open up the FA channels and the IRA channels, it's trillions of dollars of capital.
And the advisors are actually often incentivized to help get those crypto native investors into the ETF as well. And I think that's an interesting area where it's not necessarily new investment, but it's changing the shape of how that investment is held. Advisors that are able to get their crypto native clients to put their token into the fund via an in-kind investment can then say that they're managing that wealth. And that's another avenue of investment we're seeing, not new money into crypto, but a kind of change of flavor.
What's the penetration on the FA side? I mean, I know my cousin, he lives here in DC, he works at a credit union. He doesn't let his clients touch crypto, even the ETFs.
It's definitely evolved quite a bit. So going back to the points about some of these years-long conversations, oftentimes that's with advisors. And the conversation often started off as like, I don't want to talk about this at all. I'm not going to put my clients in it. I'm not going to let them get into it, to my client is breaking down my door. How can you help me get this exposure? Total 180 in the conversations. And I think that almost all of them now at least accept that they need to understand it if they're not more proactively leading the charge.
Yeah, I would just add as well, agree on the crypto ETP side, I think thinking of tokenization as well. As traditional asset managers launch regulated tokenized products, also our client base is increasing as well. We have new on-chain native investors who may not have been our clients in the past, so our client segment is increasing as we launch more tokenized products.
Okay, so we're having this conversation 2 years from now. What do you think would have changed the most in institutional crypto?
I think we're going to see a lot more tokenization.
Of what?
Of equities, of real-world assets. Maybe not real-world assets
Private
that
credit?
short. I think eventually, but I think that the question of why should we tokenize Apple stock, it won't be a why anymore. It'll just be a given that it is.
We're at the why now?
Yes.
Yeah, so I agree with that. And the why, not if, to me, is also from an allocation perspective. It's not going to be why should I have crypto. It's going to be why don't I have crypto in my portfolio. And I think 2 years from now we see that because of tokenization, because of all the use cases. So yeah, I think it's going to be from an allocation perspective that'll change.
And hopefully more interoperability through standards and more secondary trading and liquidity.
And what do you guys think is the most underrated and overrated element of crypto right now being discussed? Is it vaults, Kathleen?
I think vaults are honestly, they're very exciting. I think that they are really early stage, but at the same time, I think the ability to have kind of rule-based pooled investment vehicles is pretty exciting, thinking of use cases going forward. I would say the most underrated really still is tokenization infrastructure. I think that, I think it's really unlocking with all the experts across every infrastructure function within our asset management firm, the ability for programmability and smart contracts to really create new business models for how we operate.
I agree. I kind of stole my thunder with my last answer, but I think it's tokenization here too. Just going to a lot of traditional conferences, I think the buy-in still remains to be seen, but I think that it's going to be something that all have to embrace.
I don't know if this is underrated because everybody's talking about AI, but I think the combination of blockchain and AI and what that means and the things that people that are way smarter than me will develop with those two technologies, I think our entire operating system in the world is going to change once that develops more.
Is that part of the thesis of the new fund?
Yeah, we're definitely doing a lot of focus on blockchain for AI use cases. Yeah, it's almost like you don't even have to ask for it. It's just kind of like inherent in a lot of these projects. But yeah, it's a big
Amazing.
project.
Well, thank you all so much. Let's give them a round of applause.
Thank you.